All right, everything looking good. We are live. Let's go ahead and get this little chart party started. Somebody let me know in the chat. Everything's coming through loud and clear, please, if you would. But in the meantime, welcome back to the channel. It is Wednesday, 8 p.m. Eastern Standard Time on August 31st, 2022. And of course, as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, well, obviously today is the last day of the month. So traditional markets have closed, and now we have just wrapped up the daily as well as monthly candle close on crypto. So obviously, whenever we have a long time frame closing, you know, whether it is a week, especially if it's a month, a quarter, a half, a year, very important to just kind of zoom out and make sure that we don't get caught up in the forest, you know, trees kind of like aspect of it. Sometimes when you're looking at a single chart or a shorter time frame, even if it's a daily, you definitely can get caught up. It's kind of looking at a tree, but when you really step out, when you take that, 100,000 foot view, you really get the big picture and what's actually going on. So obviously, being the monthly wrap up, that is what we're going to be paying attention to today. So we're going to be looking at monthly charts and essentially just seeing, okay, what does it look like is going on with that monthly close that just happened? What does the trend look like? And going forth into the future, and what can we expect over the next, month, or at this point in time, we really should be focusing on the rest of the year. So that is what we're going to be doing today. And then obviously we have during this month quite a bit of data coming out. So we'll have obviously some CPI data coming out, sticky core inflation. We'll have fresh data for that as well. We have the Ethereum merger this month, whether or not you consider that to be a big deal. It's a big enough deal in the crypto space that it's worth paying attention to. And then obviously we have our, Fed Powell's traditional meeting. In the meantime, we got a couple more of the Fed presidents coming out and speaking as well. But so far, they have only just reinforced what Powell had to say. So, most importantly, what are we going to do? We're going to continue to focus on inflation because we know that's what the Fed is focused on. We're going to continue to look for that same correlation / causation / inverse, relationship between what we know is moving the market right now. And we know the two biggest things moving the market right now are the actual rates. We can look at any of those. We can look at the Fed funds rate. We can look at the 10-year. We can look at bonds. Essentially all going to give us the same picture. And then obviously the US dollar as well, relationship to the other basket of currencies. So the DXY. And we know that as long as those two are operating in tandem, as long as they are tag team in the markets, that essentially it's going to be very, very difficult, if not impossible, for anything else to rally, let alone to have sustained rallies. So that being said, somebody let me know we are coming through loud and clear in the chat. Appreciate it. Everything does look good, so let's go ahead and get going here. All right, so for the end of the month on TNX, the 10-year Treasury yields, we know at this point in time exactly what we were expecting, exactly what we were waiting for has happened. Now we still have to wait for a technical confirmation on the monthly with Treasury yields as far as, Fed funds rate. But for the 10-year Treasury, we have all but broken out from this point. But most importantly, we've been below the 200 exponential and simple since 1987. Back in 1987, we pushed up above it once, closed, and then immediately got rejected. And then we have operated the entire 100% of the last, 37 years underneath this. So like it or not, don't like it, whatever, this is a big deal. We have now a monthly close above those levels. We have the flip of the 200 exponential to blue. 200 simple is all but flat at this point in time. And then on top of all that, we then closed above it, opened and closed, opened and closed, opened and then closed back at it. And then we opened and had a very, very powerful candle. We essentially took out the last three and then put in a high over the last month. So we just put in a cycle high from the bottom to where we're at now. So we know what that is. Whenever we're putting in highs, the last thing we want to do, especially on a monthly chart, is try to sit here and call peaks. Because the likelihood is the trend is going to continue, and then there's finally going to be one single candle that's a peak. So if we just ignore the whole entire chart and we just act like there's nothing to the left, that this was just the start of this chart and that's it. We're on the monthly, obviously. We have 882 days of candles right here. So there's a 1 in 882 chance that you're going to call the peak to the day. And then if we divide that out by 12, that's how many months it's going to take. So you have a 1 in that percent chance to pick it. So we got basically, essentially like a 1 in 30 chance that you're going to pick the correct monthly candle right here. So that's essentially a 3% chance. So anybody who's trying to call the top on inflation, or anybody that's trying to call the top on, yields, you have a 1 in 30 chance. So you got about a 3% chance. That to me that's not good odds. That's not odds that we can legitimately use as an edge to bet on. We look for something that's over 50% probability of happening, and that's what we look at as opportunity. So when I see something that's a 3% chance, and that's just calling the highest candle out of all the candles that have already happened. We might not see a peak in this for another, year, 10 years, 20 years. We don't know when it's going to peak. So you could literally sit here and call every single one as the peak, and it just keeps going every month. Nope, new candle, new peak. Sorry, you're wrong again. New candle, new peak. Sorry, wrong again. And just keeps going for years out into the future. So trying to call peaks on something like this, especially when we finally are closing above the 200 exponential and simple, especially when they're starting to flip over blue, especially, the current situation and what's going on here, that essentially the Fed comes out and changes the effective funds rate by 25 basis points or more, which they're scheduled to do with 100% probability in the next 2 weeks. That's not something I want to bet against. So, when people start talking about peak inflation, I'll believe it when I see it. If peak inflation is done, if that's it, it's over, we can all relax because life's going to get a lot easier. There's going to be some ups and downs, but if that's really it, that's great. We can relax a little bit. So we don't have to call it to the candle. You don't have to pick this candle right here. Let's just say this was your trough, your low for the cycle, and this is your high for the cycle. We don't need to get this exact one right here, or this one, or this one, or this one, or this one, or this one. Let's just say we get somewhere in the meat of the candle, and let's just say we pick the peak up here too. That's a nice move right there. 337% on yields. We don't have to literally pick the absolute bottom of the absolute bottom and then the absolute top of the absolute top and then say, okay, that's it. Because your probability of success is, diminished drastically trying to do that. So that's the end of the month. This is an extremely, extremely bullish candle on the month right here. We basically have the 8 and 21 bullish posture. We're back on top of the 200 exponential. We're back on top of the 200 simple. They're either flipped currently or about to flip. We're in the bullish control zone. Bulls are in complete control on the monthly. All green histograms, blue slope line. Very, very bullish. Very bullish. Now, it doesn't mean we can't consolidate. It doesn't mean we can never get back down below these levels again. But we know at this point in time, when we look at the yields, the 10-year treasury yields, when we look at it, this tells us the bulls don't need to do anything. The bulls have already won. All they have to do is just not go below 2.7. And if they don't go below 2.7, they just go sideways for 1 month or 5 months or 6 months or a year. Eventually, 200 exponential and simple are blue. The 8 and 21 will cross above them, and we'll have a complete bullish posture. And then we'll close the monthly above this peak right here from 2018. And then after that, we know we're likely to run up to the double top from back in, 2006, 2007, or at least some of these other clusters of resistance. So we've been consolidating at this one. Now we're essentially at the point where any further consolidation, any further upside, and we confirm the breakout. So very, very close to, obviously just waiting just waiting on the next Fed rate hike. So, by the end of the month, three weeks basically in from now. All right, so on to oil. So here we're looking at oil. Obviously, we've been talking about expecting a, peak or spike top or something to that effect. At this point in time, it's hard to deny what we have here. We have 4 months in a row of, strong trending upward candles with a strong rejection that we haven't been back up to yet. And then from that point in time, we now have 3, pretty big bodied red candles as well, wiping out the gains of those 4 candles. That looks like a top to me. It looks like a blow off top. It looks like a spike top, whatever you want to call it. We can look at previous examples where we had something even remotely close to that. And we have, basically 2018 right here. That's relatively close. This is relatively close right here, 2011. This is relatively close, all-time spike high, 2008. Something like maybe 2006. We saw something kind of like that in 2003 and then continuation. 2000, 96, 90. I mean, every time we saw something even relatively, with the exception of this one is arguably the outlier. Here we even broke down, almost crossed the 821, and then we saved it. I mean, this looks like how oil tops, when oil tops. Now, does it have to be the case? No, but the thing about oil that's a little more trustworthy, especially when we see a situation like this, is the fact that typically we know oil is, the 4th horseman. Energy is the apocalypse, essentially. The other 3 horsemen show up, wave their flags. And if you don't wave your flag, your white flag, and give up, then oil shows up afterwards and brings on the apocalypse. And by the apocalypse, I mean hard times for, the global economy, the world in general. So if we're looking at potential recession, depression, we're looking at all these various things, a bunch of demand coming offline, if we do in fact have world economy slowing, well then we don't have to worry about it because oil energy prices are going to end up being the cure for high prices. I mean, that's exactly what we see happening. That's exactly what happened right here. We ran up ridiculously in 2008 to a new all-time high, and energy prices were so expensive, it basically crashed the market. Now, is it possible we're doing something like this? It is definitely possible. And am I actually very, very bullish still on oil and energy in general? Oh yeah, for sure. You guys know that. It's no surprise. But again, here we got back on top of the 200 exponential and simple after basically a double bottom. And we see all of the things that told us we were going up to these prices here. We obviously got very bullish on oil back when it was $40 a barrel. And we went on an epic run since then. But we took profits like literally up here. 114 is where we took profits. So does it have to come way back down to benefit us? No. If it goes down from 114 to 89, that's 24 points that we locked in. I mean, those are in the bank. So we could buy in right now and not give a shit. We don't need to look at it for 10 years. But if it looks pretty obvious, like, hey, we might be coming back down here to backtest like 73, the 200 simple, the previous peak from right here, maybe even get a wick down into the low 60s. I mean, we're not just going to buy at 88, let it go down to 62, not do anything, and then just wait for it to come back to 88 just to be break even. I don't think so. That's not the game we play. But you guys already know that. Hard sell, left the bullish control zone. Stochs are accelerated to the downside. I mean, this is, it's not. Okay, here's the thing. You could say, well, all we did was just wipe out the 4 months on the way up and then the 3 months that took place right here. So we're really just back where we were 7 months ago. But think about what that means, though. Anybody that bought energy, bought oil in this case specifically, in the last 7 months is at best break even. It's at best break even. So everybody piled into that oil trade late, obviously. We talked about it. We said, hey, when you get here, when the rest of the market gets to the energy trade, we're already sitting on the bus. Okay, we got our shit laid out, comfortable. We're relaxing. We got the best, window. We're not going to have a window that you can't open, or it's all like foggy, or there's a big sticker or poster on it so we can't see outside. We're not going to position ourselves in the back of the little tour bus by the, little porta potty inside, so we got to smell shit the whole time and people banging the door into us as they try to go out. No, we're not doing that. We got the best seats. We got the most comfortable position. Then everybody else shows up. We welcome them on. And then, towards the end, we know there's only one stop left up at, 114. We say, you know what? Actually, this is my stop right here. We pull the little thing, get our stuff together, say goodbye to everyone, and we get off the bus. and then the bus drives off the side of a cliff and, you know, crashes and burns. So that's it. We just position ourselves in advance and then obviously use the rest of the market as it catches up to us for liquidity. So they're buying the top, we're buying the bottom. We're selling the top, and they're still buying or just bought in, ready to go on this, you know, epic journey. Don't realize the journey's already over. For now, maybe it's not. We'll see what happens. But I mean, I don't think it's crazy to think we're coming back down here to like $73 before we go much higher. We probably are going to need to consolidate through this region, you know, through this area. We don't know how low it's going to go. We know we peaked out right here. We know we have the 200 simple right there. We know we have the 200 exponential right there. So we now have essentially what amounts to like a 37 to 45% range. We could just chop around in this range for months. That's no problem. That's totally cool. And we know, obviously, after looking at that TNX chart, that all we really need to do is stay above 73. You know, we can wick down. We can see some resistance. We can wick up. We can see some, support rather. We can see some resistance. But as long as we just operate in this range, which it seems very likely we are going to, look how much price action was in that range back here. You know, it's not crazy to think that we might operate in this range for, you know, months, possibly even years, bouncing down between, you know, mid 60s and low hundreds, 115-ish. We just bounce around here for a couple of years, and then eventually maybe we break out to upside, you know, new highs. That's not crazy to think. That's literally what happened right here. Now, potentially we could break down. That's always a possibility. Obviously, you know, here was the spike. We had a little bit of time we spent above that. But, I mean, you could say over this period of time, over 50% of the time, we were operating in that top region. And then, obviously, there was the breakout down here. That was the other 50%. We're operating under that region. So you could argue that as long as we're above this area that we're identifying, you know, as basically, oh, I forgot all this crap's on here, my bad. As long as we're operating in this area, you know, we basically just have a big just sideways channel, right? How much of this, how much price action has taken part in this two areas right here? So, you know, this is going back to 2005 up to, you know, 2022. So this is 17 years we traded inside this range. Now, half the time we traded in the bottom of the range in the orange, other half the time we traded in the top of the range in green. So it's not crazy to think we spend, you know, our quarter, which is what it amounts to, up here in this area, and then maybe we break down after that, maybe we break out. We don't know what's going to happen, but it seems pretty likely to me at this point in time that maybe oil is not just going to go, you know, straight up parabolic and just all of a sudden go up to, you know, 200 or 500 or whatever the hell else people are expecting. Now, is that possible? Could we go up to those numbers? Sure, we could. We could. But I don't think that's what we should be banking on right now. I think we should be banking on trading this range for the next few months or years until. Trade the range until. Buy support, sell resistance until. So, you know, as far as I'm concerned, we're looking at being a buyer in the high 70s, high 60s, low 70s. We're looking at being a seller in the 1 teens. Good monthly close, but clearly showing some weakness in our indicator oscillators. Definitely looking for somewhere in between 63 and 73 as a buy area. And if we don't want to push it, we don't want to worry about this getting away from us, we just take a little buy at 73, take a little buy at 68, take a little buy at 63. And then after that, you know, we have to just use our thesis. If we're wrong and we just suddenly just drop through the floor, obviously we're wrong. We get out of the trade. And if we're, you know, wrong to the upside and suddenly we just break up here to that, you know, 114 level or 10, whatever we're looking at as the top level, you know, you could argue that this is a pretty important level, 107. It was the peak here, 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 almost here. And then, you know, through here resistance. So you could say if we go above 107, you know, I was wrong. And then we can readjust. But in the meantime, looks like we probably just trade in that range. So next we have the Dow Jones. So Dow is staying strong here. The thing that we've been paying attention to, what we were expecting, was essentially that end of the half, end of the second quarter, push back up, the back test of the 821 to try to stop the cross from happening. So here when we did it, we closed back on top of the 8, and then we saw a continuation, and, you know, the bulls won. The bears were beating them down, the bulls showed up, and they were able to save the trend, and we continued to the upside, you know, right up until we didn't. This is obviously 2008. We saw them save the trend here in 2015. We saw them save the trend here in 2011. We saw them recapture the trend and hold in 2010. And then before that, we saw them lose the trend. They failed in 2008. And when they failed in 2008, what did it look like in real time? Well, we broke below the 821. We back tested it, attempted to save it. We got a rejection candle, a neutral or, semi-bearish candle right when the bulls needed to come in strong. And then after that, we saw just disgusting continuation and complete meltdown. And then, of course, prior to that, we see 2001. So we have 2001, we have 2008, two of the arguably most important times in history in the markets. And then, of course, 2020 as well. So we have three specific examples. Each of those examples, the 8 and 21, confirmed to the downside. That has not happened yet on the Dow Jones. We know, though, for sure, the Dow Jones is not an accurate representation of the United States stock market, let alone the United States economy. It cherry picks specifically big, good, large companies. And because of passive investment, and the structure of the United States, or just investment in the United States stock market in general, we know that it's going to look artificially good, which that's okay, because obviously funds are going to flow into it regardless, passively. Pensions, all that good stuff, 401ks, all of the people's, retirement investment, etc. Let alone what money managers do. ETFs, we know, are a big, big trend based on the flows that we've seen into passive ETFs versus active ETFs, etc. over the last few years. So regardless, without getting into too much detail there, we know this looks like the back test. We then saw the continuation, and that was what led to our rejection of the 200 on the daily. And what was this realistically on the weekly? It was just a bounce off of the 200. So now that that has happened, now that we bounced, we back tested, and we clearly got rejected. I say clearly got rejected because we have a big old tail right here where clearly higher prices were rejected. And then we saw a big chunky red candle right there back below the 8 and the 21. So on the monthly, hard sell signal, Stoch's powerfully angled to the downside. All red histograms, red slope line, headed towards 0. 821, about to cross the downside. We know, again, the bears won. The bulls pushed back up, showed their strength, showed their hand. The bears have a straight flush, trumped the hand of the bulls. And now it looks like the bears will win. So where does that going to take us to? Do we get some nasty candles right here? Well, we're very close to the 821 crossing the downside. Now, there is still a chance that we don't cross the downside. That is definitely still a chance. But if we look at, and we're going to look at just about every other index, sector, stock in general, we'll see that there's probably, we can count on a single hand what is holding up the Dow Jones right now. So here's the S&P. Again, we'll look at the same type of situation here. This is 2008. This is 2000. This is SPY. So again, very close to, to confirming that 821 cross the downside. We did the exact same thing again. We back tested it, rejected, sell off. Back tested it, rejected, sell off. So that's exactly what we just saw happen. This was our back test. This was our rejection. And what's going to happen next month? We're probably going to revisit the range. Does the bottom of the range have to break? Do we have to go to a lower low? No, we do not. We do not have to. But we need to look for price action when we get down there. One of three things is going to happen. If, in fact, I'm right and have been right and continue to be right, we'll back test the bottom of the range and we'll either put in a lower low and likely go lower. We'll either put in a double bottom and possibly, put in a bottoming pattern and then be bullish again. Or we'll come down and put in a higher low and then we have an even better chance of pivoting back to the upside. But at this point in time, we have to wait until we get to the bottom of the range, and then the market has to prove to us. The bulls already proved they don't have the strength, or the bears prove that they do, however you want to look at it, to reject us. So again, the longer we spend below here now, we can just go sideways for 12 months, and the 821 cross the downside. And we know when the 821 crosses the downside, we get disgusting continuation, 20, 30, 50% further downside. Typically what you would see is a back test of a 200 exponential on simple. So that's my target. Likely, a back test of, well, this was our last pretty brutal sell-off right here in 2019, 2018. This was our 2020 sell-off. Pretty nasty as well. Same bottom. So to me, if we're going to really get it, if we're really going to confirm the 821 cross and have this disgusting sell-off, what better area could we possibly pick, to end up being support than the same area once again? which just so happens to line up with the 200 exponential and simple, depending on when we get there. So now all of a sudden, coming back down to this 246 level, when we're at 395, and keep in mind, we were just at 420. Shout out to my boy Elon. We were just at 420, and remember how bullish everybody is. So don't you dare get bullish at 420. Like, and then as soon as we break down below 400, now you're bearish. Oh, hang on, wait, what? I mean, listen to all the people that said, well, we have a rules-based system, so we have to be bullish now. Oh, wait, what? What are your rules? After price goes up, you're bullish? That's your fucking rule? Come on, get out of here with that bullshit. I'm talking about a real rules-based system, okay? So anyway, the way it looks to me, I'm not saying we have to go down to 247. I'm not saying we're going to drop, 40% from where we're at. 37.57. But I'm saying there's a fucking chance. And if there was ever a chance, ever of that happening, it's more now than any other time. We're very close to this happening. Very close to this happening. And even here where we stopped the cross from happening. Look at how disgusting that candle was. We might have stopped the cross from happening. But in the meantime, you rode that thing 27% to the downside. And that was a pretty nasty candle in real life. So, I mean, can you even hang on? Have you ever been to a rodeo before? 8 seconds is a long fucking time when you're getting wrecked by some cock diesel bull on steroids. I mean, we'll see. I want to be wrong. It's easier to make money to the upside, but that looks like shit. And remember, we just looked at the two strongest things in the stock market. Let's look at the Qs. Look at the NASDAQ. See how tech looks. So obviously we have here tech 2008, tech 2000. Both times we got the cross to the downside. We saw a disgusting continuation back to what it would be the 200 exponential and simple. We know that. Already confirmed the cross. We confirmed the cross here. And then I said, look, in real time, we know this is going to push back up and back test it. And then it's going to flash back green again. And then we'll see once we get rejected, likely to push up through it. This is literally exactly what I said happened. But you guys all know or you wouldn't be here right now. So here we are, across the downside. This monthly candle is closed. Now, is it possible we push back up here again and then get back on top of it and then it flips green again? And in real time, it crossed down, it crossed up, crossed down, crossed. It's definitely possible. And it's a monthly, so it's going to get a little choppy sometimes here at the pivot point. But assuming that doesn't happen or assuming it does, either way, we're at the pivot point and we're going to have, after this happens, here we threaten the situation and years go by afterwards. Keep in mind, obviously, this is a monthly chart. So if this is going to be the flip back, we threatened it right here, and then we saved it right here. That's 852 days. So, once every 3 years, we have to worry about a potential cost to downside. Well, what about before that? Well, here was one, and then here was the next one. That was 485 days. So roughly a year and a half. And then about 3 years before that, we had one. And then about 3 years before that, and then a year and a half, and then a year and a half. And then, the one before that was a couple of years ago. So you only got to worry about this every couple of years, potentially even happening. And we've only seen in history, going back obviously to 2000. So in the last 22 years, we've only ever crossed it to the downside twice. Now, in real time, it's very important to remember. And people don't talk about this when they're like, oh, look, all you do is just sell at the Bravo 9. Oh, look how easy it is. Whoa. Sure, okay. In hindsight, when you look back and you say, but in real time, it isn't. And you got to look out for indicators having reprints and look out for all this stuff. And if I just start saying, oh, look, as soon as we cross to the upside, you just buy right here. And then obviously it doesn't matter when it's 766%. But the difference when you say, oh, I just buy when the cross happens. And then you look right here and this is when the cross happens. And you start measuring and going from right here at the cross. Well, you don't get to go from the cross. You get to go from once you confirm the candle below the cross and then it turns red. So in real time, you're going to buy right here. So now we have the difference between 18%. So it's easy to pretend like everything's working great and you have a great system and everything in hindsight. But in reality, it's much more difficult. So there's lots of little tricks that people play in the finance space or with indicators, reprints, with, popping up a chart real quick and saying, this is what I would have done. This is what you should do. So buy my course and learn how, blah. Yeah, I mean, it's really easy to do that. In real time, it's a whole different game. So if people aren't telling you what they're doing ahead of time, and then you can't go back and verify, hey, was this person right? Are they right all the time? Obviously not. People are wrong sometimes. But, You go back and you say, let me look at 10 times. Let me look at 20 times when this person make a bold call and see, were they right 11 times, more than 50%? Were they right 15 times, almost 75%? Were they right 18, all 20 times? Were they right 0? Did they delete all the videos where they were wrong and leave up the videos where they were right? Shout out to you, Bravo. I know you're watching. I mean, we don't know. But it's worth paying attention. If you don't put in the work and somebody tricks you or scams you, you can't be mad at them afterwards. Because you're lazy and you just believe the little show they put on, a little horse and pony show. So anyway, QQQ, breakdown from here, likely retest to 200 exponential and simple. Been talking about it. Literally what we said happened. So let's just say, right now you're still in the Qs. You're not sure. Do I get out or not? Do I just ride it on down? Do I buy the dip? It's 48%, 57% for a back test of 200 exponential and simple. Now it doesn't have to get that nasty. And I promise you, at the bottom is when you're going to be feeling the most pain and you're going to be most likely to sell because you're afraid it's just going to go down forever. The same way when we're going to the upside, it feels like it's going to go up forever. 44%. So just make sure that when you say you got diamond hands, make sure you can handle that 44%. And again, just, cross to trough, tech sector blow up, 73% on the NASDAQ. So just make sure you can handle it. If you can just look the other way while your wealth evaporates, but as long as you don't sell, you feel good about it. And you can write down on a piece of paper, I'll be fine holding for 2 years or 5 years or 10 years. But 20 years, that's where I draw the line. There's no way I would hold down 40% for 20 years and still consider that to be a good decision. Or whatever your decision in 10 years. Maybe in 10 years, if you haven't made money on that investment, you might as well just sold and put it somewhere else because of, cost of capital. And then Russell is obviously trash. Same thing, backtest, smackdown. We saw, the 2020 situation. We saw the 2015 situation hit Russell a little harder, small businesses, 2008, 2000. So again, we have a couple more reference points. One was shallow right here, 2015. So Russell a little quicker to react, as none of the other ones gave that cross right there. All the others did. Russell crossed the downside first. Obviously didn't do the same as we saw from the other major indices. Hard sell signal towards the bottom of the range. Bears are almost in control. Rejection, 821 cross the downside. All red histograms, red slope line below the 0 line. So where does the Russell go? Back test. 200 exponential and simple, 124. Seems likely. It's only another 33% downside from where we're at. So it's actually not even that bad. Very strong, what should be support based on this previous consolidation around this level. Around like that 117, 120 level. So we see of our 4 major indices, 2 have already confirmed the cross. 2 had been borderline confirming the cross and tried to stop the cross from happening. But all they really did was postpone it because we know as long as we're below the 821 on a long enough time frame, eventually it will cross. Even if nothing else happens, they cross. And that's the confirmation. So next we have SMH, semiconductor ETF. So obviously, one of our 4 horsemen, very important to pay attention to. So we have our 200 substantially below where we're at right now on the monthly. Substantially below us. I mean, we're talking about like ridiculously low. So we'll see what happens. Around 100 is the target for this. So essentially a 50% sell-off. All hard sell, left the bullish control zone. Stoch's powerfully angled to the downside, very close to the bearish control zone. All red histograms, red slope level, headed to 0. 821, all but confirming the cross. We have not had a bear cross down since we crossed back to the upside back in 2010. And we know, obviously, that semiconductors are directly linked to, the economy in general, as they're basically in everything. So when semiconductors go into a bear market, that's one of our big red flags. Obviously, transportation as well. That's the first 2 of the 4 horsemen. And then we look at the yield curve inversion, which everybody has been looking at now. So we know that's obviously triggered already. And then obviously the 4th horseman of the apocalypse is energy/oil prices. We went up by over 50% in, a short period of time. And now it looks like we're putting in, basically a blow off top or a V top or whatever you want to call it. So it seems to me the probability of this cycle being over, the end of either a cyclical bull market or secular bull market. We don't know which one, possibly both. But it looks very clear now that we're at least threatening that. Now, is it going to be a 2008, 2000 type event? Is it going to be a 1940s type event? Are we going to see inflation out of control and we see something closer to the 70s, prolonged inflation as the Fed backs down and rebacks up, and then administration keeps spending when the Fed's trying to fight, and the struggle goes on, between the government and the not government that acts like government by controlling monetary policy? I mean, we don't know what's going to happen going into the future, so we have to take educated guesses based on that. So those are the main areas we're going to try to compare it to. And in one of those areas, inflation was out of control, stayed out of control for a long period of time, and eventually rates skyrocketed accordingly. We talked about that in the previous video about what exactly it's going to look like if inflation gets out of control, if rates spike to the upside. I'm going to skip through this stuff. We'll look at it next time. So that's our monthly charts. Obviously, we can see some important stuff going on, and it's not good. So here's our DXY chart. Of course, as always, people will be calling that the DXY has topped once again, as they have been the entire way up. I can understand how we could look at this and say, okay, this is definitely worth paying attention to. This could be a potential topping candle. But the one we got after it, the month that just closed, that doesn't look like a top to me. That looks like something that's about to go literally parabolic straight up in the air. We can draw a line from literally the ground to the sky, and it's borderline the same as what we see right here. So to me, it looks like we're going parabolic. We blew through resistance right here. Everybody else has been bearish on the dollar the whole way up. And now, only now are people starting to say, wait a minute, there might be on to something with this DXY thing. And a lot of people are still trying to call the top. So again, we know, on the monthly chart right here, we know 50 years of price action, 3 tops. So what's your chance on calling, the overall peak? What's your chance on picking one of these 3 peaks in real time? Not good. It's not good. I'll tell you that much. This thing is all, this is all bullish. We're 8 and 21 across to the upside, bullish, postured correctly. 200 exponential, postured to the upside aggressively, blue slope. 200 simple, postured to the upside aggressively, blue slope, below the 200 exponential. So everything is bullish on this. All 4 indicators are screaming massively bullish. Price action on this chart, it could be more bullish if we weren't past this top right here, which is 120. That's obviously our next target to the upside. And the only thing that could literally make this chart even more bullish than that is if we took out 165 and we were literally in a blue sky breakout, all-time high dollar strength in comparison to the basket of currencies. So if we break through here, we go from like 95% bullish to like 99% bullish. Right now, we're about, 90% bullish. So the way this chart looks to me, I'm not worried about anything until we get to 120. Until we get to 120, I don't think there's anything that can stop the dollar. It is literally a freight train right now. And you can stand right in front of that freight train with your groceries if you want. You can play on the train tracks if you want. But what are you doing? You're picking up chump change in front of the freight train, going 100 miles an hour, steamrolling in front of you with so much momentum, world momentum, not just U.S. momentum. You could hate the USA. You could hate the dollar. You could hate the government. You could hate the other side of the political aisle. You could hate whatever you want to hate. But you can't deny that this is a powerful, powerful chart right here. So all the momentum, we have left the bearish control zone, hard buy signal. We're in the bullish control zone, powerfully going to the upside, 100% bullish. And here, all green histograms above the zero line, above the slope line. The slope line is blue. Again, this chart is 100%. Everything is flashing bullish on this. We could only be more bullish if we had just took out 120. And the only way we could be more bullish than that is if we took out 160. And that's a blue sky breakout on the DXY with, tons and tons of world dollar denominated debt. And again, it's not that misconception that people owe this money to the United States. They may have taken out loans in their own country denominated in dollars that they will have to pay back at a poor exchange rate because the money that they have coming in, their earnings, are not in dollars. So now they're essentially doing the same thing as Forex trading with their debt. So it's good when the dollar's been melting down for decades, but it's real, real bad if the dollar starts melting up. So again, very, very hard to find. You can't even find a better chart than this. So the main areas we're looking at right here, obviously, we have the the peak back here from 1985. We have the low from 2008. We have the peak back here from 2000, 2001. So we're going to fib from the top to the bottom, and that's our red fib. We're going to fib from the top to the bottom. That's our orange fib. We're going to, depending on what time frame we're looking at, we're going to, from the bottom here, from the top right here, we're going to look at resistance and support levels. Obviously, I have one descending channel in yellow, one in white. And then we have, you know, obviously our, well, let's not even get too much into what's going on. Sorry, it's like a lot going on here, but where are we at right now? This is our target. This was our target. This has been our target forever. So somebody asked today, are we at resistance? To which I say, yes, we're definitely at resistance. We're at the 786 in orange. We're at the 0.5 in red. We're at the target, the take profit, the top of the channel. But just because we hit that level does not mean that we immediately just sell into resistance. We normally do that. We normally just take profits at the top of the range. But this time, you know, I don't want to say the old cliche, this time is different, but we can see something different is going on right here. So obviously, if we get the measure move break, let's just say this ends up being the breakout. And we don't know if it's going to be from the bottom of the channel to the top of the channel. Maybe we should be using the yellow channel. Maybe we should be using the white channel. Regardless, if this is a confirmation of breakout and we're going to see that potential measure move, that's a back test of the top. So the channel just so happens to be half the length of the potential breakout to the top. So that would be a back test of the highs. Okay, that's a lot of confluence. And then right before that, obviously we know we still have one more level in orange right here, which is from the peak in 2000. That's our top. That's our bottom. That's a 78.6%. We're above that now, consolidating. The 88.6 is slightly higher at 114. We talked about that level. And then obviously 120 is the top from right here, or the back test of that peak, as well as the 618 internal retrace from the very top to the very bottom. So that could be, you know, double top, and that's it. And we roll back over. Maybe we blast through that and we double top up here and we roll back over. Maybe we already topped and this is just, you know, a consolidation above resistance, and then it's actually going to get rejected and go back down. It's possible. It is possible. But again, calling for the rejection right here and the end of this dollar move, which, you know, arguably has been, the dollar has been strengthening since 2008, whether people want to admit it or not. And people are like, well, that's a relative strength of the dollar. That doesn't count. Really? You don't think it's important whether or not the dollar is strong compared to the basket of currencies it's compared to? Well, I can think of one specific reason it would be really fucking important to know if the dollar has actually been strengthening for the last 14 years straight. And somehow everybody talks about how shitty the dollar is and how it's weak and it's trash and it's going to zero and it's going to lose its world reserve currency status. Really? So it's been a 14-year massive bull trend, taking out a previous consolidation high right here, and it's headed towards the second highest, the second strongest it's been ever in all the existence of planet fucking Earth. But that's not important at all. I would say it's important. And yet, for some strange reason, the narrative this whole entire time, for literally a decade, has been how the dollar is weak and it's fading and it's getting ready to go to new all-time lows and blah, 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 blah. That's a pretty fucking big thing to be wrong about, in my opinion. That's a pretty fucking big thing to be wrong about. Because if you were wrong during this, let's say you live in the United States and you've been investing in other countries, let's say any of the ones that the dollar has been strengthening compared to, you know, the euro or the British pound or the Japanese yen, or not as much Canada, actually. I mean, there's been fluctuations, but again, I've talked quite a bit about how Canada is holding strong. But the point is that if you invested in them, let's just say, for instance, during this period right here, you were invested in Japan. And let's just say, let's just say you had a basket. Let's say you had an equally weighted basket, the same as the DXY is, and it was composed of, you know, UK stocks and European stocks and Japanese stocks and Canadian and all these different stocks that are in the basket in the exact same weight. So the euro is like, you know, what? Over like half of what's in there. And then, you know, it's perfectly weighted out. Well, even if you did make 17% on those investments, when you go to convert those investments back into dollars, there goes your fucking gains. There goes your 17%, because you lost that much in purchasing power with these other currencies in relation to the dollar. So let's say you had 17% gains in the last 883 days. Well, in the meantime, you had 17% loss in purchasing power in that currency compared to the dollar. So you're back to square fucking one. So you took a bunch of risk, and then the Forex got you in the ass. So what if you had a loss in those? What if they just went sideways? You went negative 17% because you lost purchasing power because of the dollar. Well, what if you had a loss and you invested in those instead of the dollar? So then you lost 15% because they went down, and then you lost another 17% because you had to convert back into dollars. I mean, I would say that's a big fucking deal. You know, if you're gonna trade foreign stocks, you better take into account foreign exchange risk. You know, based on the strength of the dollar. And I mean, if you're gonna not be a brain dead retard, it's probably important to look at the last 5,295 day parabolic, you know, trend. And now arguably the whole thing hasn't been a parabola, but you know, we can see by using our little tool right here that this is our bottom. This is the top that we have fib to. Prior to ever coming close to this has been in place for some time. And we can see these strange, just random areas where we back test key areas. Oh, look, we come down to the 786. Oh, look, we hold support at the 618. Oh, look, we hold support at the 0.5. Oh, look, we come back down to the 618. I mean, this isn't random. This isn't just a fluke that we just so happen to come to these levels every time, and those are the important swings. This isn't just a random thing that I drew on here. I mean, this is a tool that you can put on in advance that helps you to identify where those key swings are at. So one of them was obviously right here on the 382, and then after that, we came down to the 618. Once we broke through the 0.5 right here, we immediately shot up and back tested the 382. So if we consolidate here long enough, where are we going to go to next? Well, 236 right here. And the 236 going to randomly just happen to be around the same place as the double top from right here and also the 618. Well, I mean, if you draw enough lines on a chart, of course, we're going to run into some of them. That's what people will say, of course. Of course, well, I mean, how many lines are on that chart? Of course, we're gonna run into a line, and then you say, see, I told you, run into this line. And if it doesn't run into that line, it runs into the other one, and then you say, see, I told you we're gonna run into this line. Sure, okay. I mean, I don't care. I don't care if you believe in this or not. I don't care if you believe in Miss Cleo, the fortune teller. I don't care if you believe in magic 8 balls. I don't care if you believe in Santa Claus. But I mean, it's hard not to believe in this. So we'll see what happens, but I'd be real careful trying to call tops on the dollar. I mean, if you were gonna, you have at least, I'd say, a 1 in 3 chance here, at least to try to call it, because that was one of our targets. But I mean, looks like we're going to 120. Maybe we cool off for a little bit, but we just had a cooling off in the dollar, and equities rallied, and I don't know. It doesn't seem likely that we're gonna have another fake Fed pivot, and then equities rally, and then all of a sudden the dollar rolls over. And even when that did happen, and equities ran up, 20%, retraced 50% of their sell-off. Massive moves in the markets over the last 2 months. And even then, what really happened? The dollar just went higher. So you could argue that the dollar makes it very hard for equities to rally. But when equities are rallying, the dollar is just kind of kicking around, smoking a fucking cigar. You know what I mean? Might have a little bit of hash inside of there. Getting his rocks off, relaxing, having a drink. Equities are rallying. They're running around out of control. Going nuts. Bed Bath & Beyond up 300%. Bull market's back on. Oh my God, this is it. Get your dollars in. It's never going below this price again. And then what happens? Dollar takes a big old hit, chugs the rest of his whiskey, and then just starts kicking fucking ass. And what happened to equities? They start just melting down while the dollar just starts stomping all over them. And we know as long as DXY is strong, as long as 10-year is strong, or Fed funds rate, or whatever we want to look at for the cost of money, we know it's damn near impossible, at least for the last year or so, for any of them to rally. So why all of a sudden they're going to be able to rally? I just don't see it. I don't see it. So anybody calling for the top of the dollar on the monthly right now? Might second guess who I was listening to. Might go ahead and just, delete them off of the list of people that are credible. Or just at least put another check next to their name. Every time they incorrectly call the top of the DXY dollar market, just put a little check next to their name. And by the time you have 2 years have gone by and there's 24 checks, maybe, stop listening to them. I don't know. Apple single-handedly holding up the entire market. Arguably, yes. Pretty toppy candle, but still on top of the 8. One of the few that are sell by sell. Bearish divergence signal at the top of the market. Multiple red histograms at the slope line. Still above the slope line. Slope line is still blue. Obviously, Apple holding up substantially better than just about anything else. Microsoft strong, but, backtest rejection at the 8. Now closed below the 21. So much weaker. Still very strong in comparison to most things. We don't really have that same divergence signal. But you could argue that, since we were inside of the bullish control zone from 2016 to 2022 for that 6-year period, you could say that leaving the bullish control zone after 16 years in the monthly could be a big deal. It's definitely of note. You're like, oh, we haven't done this anytime from the last 16 years. Since 2016, not 16 years, 6 years, but since 2016. So if we do something for the first time we haven't done in the last 6 years, it's worth paying attention to. Bunch of red histograms below the slope line, headed towards zero. Still blue for now, holding up pretty good. Microsoft and Apple obviously are, the two things that I've been the most bullish on for the longest amount of time, but they've held up really well. They've had a lot of flows. So if we do start seeing, outflows, that could change the dynamic a lot. Google holding up okay. Close now below the 8 and 21. Rejection, very close. This looks a lot like the major indices. Again, I mean, this thing has just been going parabolic. Let's keep in mind, we have not had an 821 cross on Google since 2008. And, that's what happens if we do nothing. Bulls have to act now. All red histograms below the slope line. Slope line's still blue for now. Stoch's powerfully angled to the downside. Keep in mind, we're looking at the good stuff right now. Tesla holding up pretty nicely. Looks a lot like Apple. Back test got above the 8. Closed back below the 8. It is still above the 21 for now. Strong cult following. So if the cult can hold on long enough, maybe we go through a whole bear market or recession or depression or whatever is about to come, and Tesla just goes sideways. Maybe Apple does the same thing. But if it does let go, if it does go down, it's going to get disgusting. And we're at the top of the range, exactly as we discussed. So we're going to new lows. Probably, 180. That's the equivalence of like 540 for everybody that's been paying attention for some time prior to the split, reverse, or the 3-to-1 rather split. A bunch of red histograms at the slope line. Stoch's angle to the downside. Again, Tesla holding up pretty good. So what looks good right now? Nothing. The dollar and 10-year look good. What looks okay? What's holding up okay? I mean, think about it. Dow Jones, the S&P, Apple, Microsoft, Tesla, which it just so happens, obviously, that Dow Jones and S&P have large components made up of, a few big names, which obviously Microsoft and Apple being one of them. We know obviously Tesla is doing its part also in the S&P and the NASDAQ. Nvidia, very close to confirming the 821 cross to the downside. Again, backtest, rejection, bearish engulfing. I mean, almost, not quite. So we basically got a big, thick red candle, the opposite green candle, and then just straight up every little bit of gains that were received, we're taking straight back away. And now again, below the 821, ready to cross. All red histograms, red slope line. Stoch's powerfully angled to the downside, sell by sell, left the bullish control zone. If ever there was going to be a top, I mean, this is what it looks like, right? But, everybody was like real bearish down here. And then they were real bullish right here. And now, again, they're bearish again. Always after the move happens. We're over here selling the exact top to the T, getting lucky. And everybody else is buying. They're buying our bags. We're covering shorts and they're adding their first short. Amazon, I mean, melted down, back tested, rejection, 821 across the downside. Let's look at Amazon. So we had a cross back here in 2000. That was a big deal back then. I can't remember what happened. Here was 2005. Here was 2006. Here was 2008. So we had a couple little choppy moments in time there. Doesn't look good. We know what this signature means. We know what happens after this. We back test and then we go lower to new lows. And we have, already back tested the peak from 2018, which obviously was our target for a buy, very clearly. I mean, no surprises. But we know if we break down from there, we're liable to, start testing some of these key levels. And we know where the key level really is. That was the low from 2018, 200 exponential around $65. That's another 50% downside, 50% down here. I mean, I'm not saying it has to happen, but if ever somebody was going to say, hey, Amazon looks like there's still another 50% to the downside after getting absolutely wrecked, might be worth paying attention to. Maybe. Meta is on its way to zero. I mean, it didn't even get a back test. Look at this. It's just strengthening to the downside. I mean, it's just going. It's going. Meta literally closing at the bottom of the range at that 786. Broke down from this ascending broadening wedges, megaphone, and now it's headed to just retest these lows. So 2018 lows, we just said we're expecting potential 2018 lows. I mean, Meta's not even playing games, okay? Meta is that person that doesn't even wait for the, gunshot to go off to start the race. They just take off. Meta's ready. It's going to race to zero, and it's got a head start. That's a macro macro 382. If we go all the way back to its history, 2012 low, all the way to its top in 2021, 19-year history, all its existence as a publicly traded company. And we broke down below the 236. And now we're headed to the 382, which just so happens to conveniently be the bottom from 2018. We've already gone through. This is the 786, so there's nothing left. What, the 886 going to stop us? Yeah, fucking right. I mean, right here, we bounced it for a second, but let's be real. I mean, Meta's going to 119. Now, could I be wrong? Sure. If you listen to anything I say, are you going to live in a van down by the river? Sure. Obviously, everything we talk about in the stream, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Is there a possibility that this shit gets real nasty? And basically we get the measure move of the majority of the pattern, something like this. Do we end up down here, not at the 382, but at the 0.5? And Meta's at 85 bucks, 83 bucks, whatever? Maybe. But I mean, we know slinky theory, proved countless times, essentially we're going to take steps down. So we'll see you at like 120, 125. And then after that, we can reevaluate. Maybe we get a back test, dead cat bounce, back to 157, about where we're at now. And then we go lower. I don't know. Maybe we just go straight to zero and it goes out of business. I don't know what's going to happen, but I know what this chart says. And it's not good stuff. I mean, this is disgusting. This chart is disgusting. If you bought right here, like some kind of genius, the blue sky breakout in July of 2017, and said this thing's got momentum behind it, all it does is go up. I mean, you just wiped out the last 5 years worth of gains. Anybody that bought in the last 5 years, unless you bought right here, you're upside down in your position. So how many people, how much money has flown into Meta, not only because of its actual self and people being like, Facebook is great, but also, from all that passive investing, all the money going into those major indices, which Meta just happens to be a part of. So how much of this money is now upside down? How much pension money? How much, passive money just going in here, just fucking being a loser? A lot of fucking money. Twitter on the monthly. Tweet, motherfuckers. 821 cross the downside. 821 cross the downside. Obviously cross the downside right here. A lot of key support through this area. Obviously doesn't look good. Back test, complete rejection, and just dump. Obviously this was part of the Elon Musk manipulation. I mean, whatever. I'm not like, oh, Elon is mean. He's manipulating things, and it's just not fair. I mean, but it is what it is. But that doesn't make it not manipulation. I'm not give a shit about it, but it doesn't make it not happening. So Twitter, tops right here, lower high, lower low, lower high, likely coming down here to put in a new lower low. Now, we're not going to get into it today, but actually we are going to get into it today, but not like in crazy detail. But there is an argument for this piece of shit garbage trash stock. There is an argument that actually this is a blue line of support going back here for a long, long time, back to 2017. And that, this is obviously a resistance in orange right here. And then the parabola started to increase to the downside. So we have a resistance here in red. And now we're pinched in this little triangle right here. So there's one of two things probably going to happen. We're going to come down here at some point in time and lose $36, and Twitter's going to go straight to zero in one single candle. You won't even have a chance to get out because you'll go to sleep one day and then you'll wake up, you'll check, oh, how's Twitter look today? Ugh. And it's just going to say zero. Spelled out, not even just a zero. Or comes down here, finds support, and then runs back to the top of the range. 36% potential move to the upside, 11% stop loss if we take out the lows right here. 3-to-1 risk reward ratio. Minimum we want to take, obviously, counter trend trading below the 200 exponential and simple. So there's some potential there to just trade the range. Looking for an entry around 36. But wait, you just said Twitter's garbage. Why would we trade it? Well, I mean, we wouldn't want to invest in it necessarily if it's garbage, but we can still trade it. And just, let's say something crazy happened. You know, and we came back up to the 618 from the top to the bottom, broke out of this pattern, and this was more of just, you know, a channel. Flat bottom right here we see acting. You know, we didn't come back to the top of the channel yet, but maybe we do. You know, that's 54%. And let's just say some crazy shit happens and we actually break out to the upside and, you know, get a leg to the upside. Maybe Elon buys it. Maybe Elon doesn't buy it. Maybe Chamath buys it. We don't know. Maybe Donnie Trump buys it. I don't know what's going to happen. But there's an argument that from the top to the bottom right here, we at least come up to the 1.236 or the 1.5 or the 1.618 or the macro 1.5 from the peak back here in 2013 to the all-time low. I mean, there's a case to be made that there's like a couple 100% upside on Twitter, and then it could be between 120 and 160. Now, I wouldn't bet on it, but we could. And when I say, you know, I wouldn't bet on it, but we could, I mean, I wouldn't just blindly buy down here, just assuming that plays out, but we could build a case over time if it starts to pick up momentum. There's potential for something there. Now, you know, you might ask, well, what's going to be the catalyst? Elon buys it, Elon doesn't buy it, you know, AI buys it, Chamath buys it, Trump buys it. I don't know. Nobody buys it and they just close it down. That's probably not it. I can't guess the fundamentals and what the world looks like, but you can look at the technicals and get a good idea of what's potentially going to happen from what the charts are telling us. All right, so ripping through these monthlies, obviously, you know, it goes pretty quick when we don't go to all the like shorter time frames, but you know, this is basically us saying, okay, we see what the last month did. Now we're looking at the longer time frames. What's likely to happen? Well, if everything's crossing 821 to the downside or is already, and we just did the back test, and everything failed to reclaim those levels with the exception of basically Apple, Microsoft, and Tesla, you know, we know that probably we're about to get some more disgusting continuation to the downside. Speaking of disgusting continuation to the downside, let's look at the corn. Bitty corn. Okay, I know that there's a lot of rumors out there about shortages of corn, that people are making, you know, soy instead. You know, farmers don't need as much. They don't need as much fertilizer to grow soybeans as they do corn. And obviously, you know, with the current trends going on around the world, there's a massive demand for extra soy. Help feminize the male population. All the soy boys out there. So, you know, obviously that's good, right? Maybe. But, I mean, we can see that the strength in actual corn is not reflected in Bitcoin. Which to me, I mean, that's a red flag, okay? If this is going to be the next corn, if this is going to be a store of value in the form of energy, you know, or whatever the narrative is, a medium of payment. I mean, how many people do you see walking around with, you know, dried corn in their pocket, exchanging corn with people? You just don't see it. I just don't see it as a medium of exchange. Now, I could be wrong. I don't really understand Bitcoin and the difference between real corn, but I know if you can't eat it, there's some kind of disconnect here, okay? If I can't put it in the microwave and warm it up and have some delicious popcorn, why am I going to buy Bitcoin over regular corn? And to tell you the truth, the technicals are telling me the same thing. I'd rather have the regular corn, not the Bitcoin. But I don't know. Maybe one of you guys can help me out in the comment section. Just not seeing the store of value in the Bitcoins. Because when you go to eat it, there's nothing there. I mean, you can't chew on a USB drive, right? So yeah, I mean, I think I summed it up on crypto. You know, what is the purpose of it? I don't know. So here's our monthly corn chart. 821 cross the downside. Back test. Pathetic weakness. Garbage. Underperformed like every stock in the stock market basically. And pretty much every other asset on earth. Ethereum looked okay. Couple other cryptos look okay. Bitcoin, trash city in this bitch. And what, we're already back down here ready to revisit the lows? We're already back down here ready to revisit the lows? Michael Saylor getting in trouble for tax fraud? Bitcoin revisiting the lows? I mean, shit about to get nasty? Alleged, okay? Don't talk about our God and Savior like that. Don't talk about Michael Jesus Saylor. I think that's his middle name. I can't remember. More like Judas, the backstabbing charlatan. If only someone warned us about Michael Saylor based on his 2000 exploits. If only there was literally books about him and MicroStrategy and how scummy and illegal and the history. If only. But no, there's nothing like that. There's definitely nothing talking about Michael Saylor getting in trouble from the SEC and having to pay, millions and millions of dollars for fraud. And there's definitely not an ongoing investigation into Michael Saylor. Oh, by the SEC. By the SEC. There is for sure from DC, obviously, as one of the group members pointed out today. But, I mean, that doesn't surprise me. Once a scumbag, always a scumbag. So Bitcoin on the actual monthly Bitstamp chart, I mean, does this look good to you? This was our low. We pushed back up here. We bearishly engulfed. And now here we are at the lows again. Below 20K. I mean, does it look like we're ready to just skyrocket to the upside? Or does it look like we're getting ready for a leg down? I would say a leg down. And we know exactly where that's to. The close on the monthly from 2017 just so happens to be the top from 2019. And that is basically, give or take our next target to the downside, essentially right here at 14,600. Now, we've been through and done a very, very deep dive on Bitcoin 100 times. I'm not going to do it right here. You guys know that the next target, my next target, next real target for a leg down is, basically 14,000 to 14.6, somewhere around there. Really 13.8 to 14.6. So we'll keep doing our shorter time frame analysis regularly. But again, for the monthly now, it's very important to know that, hey, we're doing a lot of stuff we haven't done before. We obviously have, our entire life cycle here and the green support at the bottom. And we have broken down through the bottom and we're now operating outside of it. When we switch down to our weekly, now we haven't closed a new weekly yet, but we've been talking about this, how, doing things we've never done before. We've never had a bull market, bear market, and then back tested the previous high. We've always never come even close to that. This was the high from 2013. We never even got close to it. This is the high from 2017. Now we have penetrated it, okay, without lube, okay, not the good stuff. Penetrated. Now we're consolidating at that level. We're likely to fall through it. We're below the 200 exponential and it's red now. We're below 200 simple, got clearly rejected. And I mean, it didn't just get a little rejected. It got rejected like a bitch. So what's going to happen from here? I mean, we're at the bottom of the range. 19,200 is the bottom. So we're there now. If we go any lower, we're putting in a new low based on, closes, wicks, depending on how far we go. But if we're just now picking momentum back up and we're getting ready for another one of these, I mean, this could be a nasty, nasty leg down. What if we overshoot? What if I'm not being bearish enough? I'm glad you asked, okay? Because I try to keep it real around here. And sometimes I might sound too bearish. Other times I might sound too bullish. Well, I don't think that's ever happened. On Bitcoin. On other things, yes. But I mean, Bitcoin's been looking like trash lately. I mean, 10,000, right? That's a pretty clear line where we got going across there, 10,000. Nice round number. So what is it, 14K or 10K? Probably both. Why not both? Doesn't look good, guys. Doesn't look good for the corn. For the cornucopia. You guys know that obviously, our most recent trade, we literally sold the top on that pushback up at 25K. I mean, perfectly. I mean, it was still publicly available in the group, obviously. And by publicly available, I mean it's available in the group for anybody that's in the group to see. But I mean, we haven't had a decent, this hasn't looked decent anytime recently. I mean, there was a nice little push up here and then rejection, and now it just looks like trash. So we could literally just buy in right now and get, 25% more Bitcoin and just say, F it, I'll just hodl from here. Or we could just wait and get a better entry. And if you, want to see the difference between if you just buy whenever or you buy at a lower price or you buy at a much lower price and what that means when you do eventually go to new all-time highs, assuming that Bitcoin's not a giant Ponzi scheme, pyramid scheme or whatever, which I don't think it is. Now, other cryptos, yeah, they definitely are. But Bitcoin, no, I don't think it is. Does it ever go to new all-time highs again? I think it does. I think it does. But if you haven't ever seen, or if you haven't watched the Ethereum video I recently did, I highly recommend you check that out, because at the end I put 3 potential trade setups and show the difference between taking a 66% drawdown first versus a 33% drawdown at a lower price versus getting like just a phenomenal entry, and then what that looks like P&L wise at the end about multiplying wealth and why it's so important to preserve wealth before you can make wealth. And if you don't have any wealth to preserve, you need to bust your ass and get a better job and make some money, because it's a lot easier to multiply something than it is to multiply nothing. Because 1,000% of 0 is still 0. So if you don't have any money, who cares? You got to get a little nest egg going. So Bitcoin monthly, just not looking good. In the bearish control zone, all red histograms below zero line, red slope line, 821 have already crossed the downside. Next support is substantially lower. If we go to 14K, that's another 30% down. If we go to 10K, that's another 50% down. So in my opinion, if you just hodl right now and you're comfortable with 30 to 50% drawdown and multiple years in a bear market, I'd say, okay. But if you're not comfortable with that, you should at least evaluate and get some kind of idea what's going on. Now, obviously, none of this is financial advice. Ethereum, how's that look? 821 across the downside, the back test. So Ethereum looks like something that people actually care about, what an asset with people that still care about it would look like. The stock market, for instance. A back test, rejection, and then likely to go much lower. Bitcoin, nobody gave a damn. Nobody bought anything. It was like, oh, we're going back to the... I think I'll probably just lay back down and go lower. At least Ethereum, somebody bought into it. At least their cult still cares. The Bitcoin cult, nobody even cares anymore. They're like, oh, look, Bitcoin's going to go back into... It's like a Xanaxed up cryptocurrency. It's so fucking high, it can barely even use its words anymore. Hey guys, things are looking good. I think we're getting ready to go back into a bull market. I don't know, though. I might just lay down. I'll see you in 4 years. Ethereum, hanging on to that 2018 peak for now, but not a lot holding this up if it does decide to sell off, because look at this little peak right here. Was that run up in 2019? It's nowhere near the peak from 2018 high, as where the Bitcoin peak, is way up here. So at least we have, the close right here, and then we have a wick from the 2019 peak here on Bitcoin. We don't even have that wick right there up to the close at all. So the difference, once we get back down to that level or through that level, we already backtested this. There's not that other big peak right here. There's not a bunch of support. So if shit hits the fan, which I'm not saying it does, okay? But if shit hits the fan, let's be real. This is the support, the equivalence support to that Bitcoin support. That's another 80% down from right now. So, you're like, I'm okay with 30%, 50% I'm okay with. That's why I'm like, fuck it. I believe in Bitcoin. That's okay. But 80% down in Ethereum, if you're okay with that, again, that's fine. That is 100% fine. But I know what that's going to feel like in real time. Because, obviously a lot of people do if you've been in the space. But that looks like shit to me. Hey, how do you feel about taking an 80% drawdown and then, you're back in profit after like 5 years though? Oh, no, thank you. I'll pass on that one. Anybody else interested in 80% drawdown? Potentially. It doesn't have to go down 80%. I don't know, guys. I wouldn't want to be stuck holding the bag on this one. And, the truth is, if you do get stuck holding the bag, technically I'm responsible because you're holding my bags. Because I was a buyer in the 80s and a seller, up almost at 5,000. So if you're holding bags, you can send me a Christmas card every year because you're holding my bags. And when you finally capitulate down here and you don't want Ethereum anymore at $300 and you hate it and it's the devil and it's a scam and Vitalik Buterin is a mean robot or whatever people are going to say when Ethereum's $3, it's a failed project, whatever it is, just send me a message and I'll come buy your Ethereum for $300 before the next bull run. Now, does it have to go that low? No, maybe it's 6, maybe it's 5, maybe it's nowhere near there, but it's worth paying attention to. I wouldn't write off 515 just yet. This to me looks like a 1, a 2, a 3, a 4, and then we have a fifth leg potentially coming down somewhere between the 0.5 at 650 and the 618 at 410. If we break down to the 786, we're talking 200s. I don't know if it's going to get there. And again, if you haven't watched that Ethereum video I did, these are the 3 potential trade setups we talked about. I'm not going to go into them in depth right here, but essentially, it was the difference between if you just bought right now and then we eventually go to the 1.618, which is $20,000, which is my target on Ethereum. And you're like, fuck you. You just said you're bearish on Ethereum. You can't be bearish and bullish. Fucking son of a bitch. Well, I could do whatever I want. Okay. And I am bearish on Ethereum and I think it's trash. And it goes towards zero and then it doesn't all the way get to zero. And then eventually it goes much higher. So 20K is my target to the upside. So if you just entered in right now and then you just hodl, you don't give a damn, and you ride it up there, that's 1,186%. So that's pretty good. Alternatively, we get down a little lower to our entry at the 0.5 right here. And, you know, you take an entry at a much better spot at 667 instead of the 1553 we're at right now. You're talking about 2,985% to the upside. Well, that's pretty good. Substantially better than 1,200%. Because, right, 30 is better than 12. I would say so. And then last but not least, let's say we get the juiciest entry ever, which it's going to be the juiciest entry ever if that's the bottom. If it goes down to, you know, 200, it's not going to look as juicy. But at 411, it's pretty juicy. Call it 420 for Elon. Shout out to my boy. That's 47%, 4,773% if it goes back to 20K. So, I mean, if you buy Ethereum at $420 and then it goes to 20,000, you know, whatever, you're going to look like a goddamn genius. If you bought it at 1,500 and it goes to 20K, you still look pretty good. You still look pretty good. And you say, well, I'll just buy it all three. Okay, that's fine. Well, I'll just wait for the best one. Okay, that's fine. Just careful it doesn't take off without you. Well, I'll just buy now because I don't care and I'm bullish on Ethereum. And I don't mind 80% drawdowns. Okay, that's completely fine. But there's a big difference between, you know, if you put in money where we're at right now versus, you know, get this 618 retrace. So we'll see. Again, watch that video if you haven't watched it already. Or else I'll take it down. I'm taking it down tomorrow. If you haven't watched it, that's your last chance. I'm just kidding. Isn't it funny though how YouTubers would be like, removing this video soon? Shout out to my boy. Fuck you, Jay Bravo. Stop watching my videos and then trying to steal my TA. Fucking punk. Bitcoin dominance on the monthly. So this is pretty cool, actually. So I was talking about the Bitcoin dominance and how we had to kind of pay attention to this chart. And essentially, I was saying it would be cool if we had a Bitcoin dominance chart without Tether and USDC in it. And actually, one of the subscribers, a member of the community, like randomly said, hey, actually, it's really easy to do that. And I didn't have to do any work at all. And he literally just sent me what to do, which actually in hindsight makes perfect sense. But, you know, it was just a thought on a stream. And literally somebody from the community was like, oh, just do this. It's easy as hell. So this is our regular Bitcoin dominance chart. I'm actually going to put down what you could do to basically have this in the description. So you can just punch this into TradingView and it will literally do that. So this is our Bitcoin dominance chart without Tether and without USD coin. So pretty fucking awesome of a viewer, subscriber, community member to do that. Pretty fucking awesome, in my opinion. So we can see the difference between this chart and that one. Now, obviously, I normally look at this on the weekly, so it's a little more useful. But, you know, this is what we're looking at on the weekly without Tether, without USD coin. So this basically was a triple bottom right here. And then the 821 cross to the upside, we took out that high and we're moving back up. Now we're back below the 821, but we have essentially a triple bottom and then a higher low and a higher low. So as long as this higher low holds right here, likely do see Bitcoin dominance up above 56%. Next key resistance would be around 60. So looking at this on the weekly versus looking at this on the weekly, like paints a different picture. Because this was essentially that triple bottom. Look how much crazier this looks with the altcoins or with the stable coins on here versus this. And then two lower highs. So it's definitely interesting to see. Oh wait, no. Did I say that wrong? That's 2018. Oh no, I'm sorry. This just doesn't have the history on it. This is the triple bottom from recently. Okay, so it doesn't look completely different. This is our triple bottom. So it's slightly lower here. So here we got bearish or bullish divergence on the three bottoms right there. Sorry about that. I obviously have not spent a ton of time looking at this chart. This is the same bottom. And then from here, we've put in those higher lows. So yeah, that's my apology. But here, we had a low, a higher low, a higher low, And now on the regular Bitcoin dominance chart, we're breaking down. So what does this actually tell you? This is where it starts to diverge. Here we don't have that same bullish divergence, but then here we have higher lows. And then on the actual Bitcoin dominance chart, we see Bitcoin is losing dominance right now, meaning people are leaving altcoins, but leaving Bitcoin and leaving altcoins and going into stable coins, because we're all the way back down testing the bottom of the range here. But if we take out the stable coins, we're basically still putting in a higher low. So technically this is still holding up for now. So the Bitcoin dominance chart minus stable coins is giving a much more bullish picture, and I think a more honest picture of what's actually happening in crypto space. Because that would be the equivalence of those people just leaving and going into cash if stable coins didn't exist, which would paint this picture. But because stable coins exist, it's painting this picture. So again, we'll spend some more time with that, look into it, master it a little bit. And then crypto total market cap on the monthly. Obviously, we have broken down the 821F cross. We had a pathetic move back up. This looks exactly like Bitcoin, obviously, but holding up much stronger. We know that the next support level was that close from 2017, 2018, and that's at like 538 billion. We're at 955 billion right now. And then the same as Ethereum, when we were talking about that earlier, we don't see that same confluence with the wick up here at that 530 level. If we came down to that same level, the wick from that peak in 2019, that's all the way at 389. Now, is crypto total market cap going to be 389 billion? Maybe. Maybe. We could do a chart like this, essentially, and put that without stable coins too, and see what the actual crypto cap is worth. So, yeah, definitely pretty cool. Pretty cool. Matic, not a lot here. Basically breaking down, back testing. Looks like it's going lower. BNB, this one is the hot mess express. We talked about this quite a bit. And I mean, if you literally came to me and said, what is the most dangerous crypto in existence to have your money in? I would say I have no fucking clue, because I probably have never heard of it. But if you said, what is the major crypto that is the most dangerous place that you could possibly have your money in? I would say Tether. And then if you said, okay, stop being a dick and tell me what's the actual most dangerous crypto that you could have your money in, I would tell you Binance Coin. And the reason is, and I've said it many, many times, the 821 are about to cross bearish for the first time in existence. So we're likely about to get a powerful move to downside, or at least an attempt at a powerful move to downside. And there just so happens to be this one candle right here. This super fucking suspect candle right here. And you're like, that's not manipulation. Binance is just really good. Okay. I don't care. Maybe this is completely natural. But there's a big giant candle the size of something we have never seen before ever since back here in the very beginning. And the difference here was from $1.90 up to $8.40. So it was a $6 candle, and that's giant right here. What about this one? This was from $44.50, and the close was at $270. So this is like a $150 candle. So $160. So that seems important, because let's just say on the monthly, we should break through that level, which is support right here. Let's just say we do break through that. I would just be really ready. I would 100% expect, anticipate, and be prepared for Binance Coin being worth $44. And if you're not ready for Binance Coin to be worth $44, I would think twice about whether or not I want to hold this. If you can stomach 84% to the downside in a single month, I think don't worry about it. But if you don't like the idea of that, I would consider the potential possibility that might be getting ready to happen. And you guys know, obviously, if we put on the weekly chart right here, we had initially an atom, a peak, and then we had a rounding top as well. Inside of that rounding top, we had a head and shoulders. We broke down from the head and shoulders and tagged the neckline of the Adam and Eve double top. And then we had a little ascending channel to the upside. We back tested 200, the 8 and 21 rather, off of the 200 exponential and simple. And now what's about to happen? You're never going to get rich shorting something, okay? You have to already be rich, and then you can make more money if you short it. But you're never going to get rich shorting something, because it can only ever go down 100%. So if you have $100 and you short something and it goes to zero, you now have $200. So you're never going to get rich like that. We showed the Ethereum setup and showed a specific way that if we get a buy at roughly $400 and it goes to over $20,000, you can make plenty of money doing that. You're not going to get rich shorting something to zero. You can only go down 100%. You can only ever double your money. But if you lose 90% of your money, keep in mind, you have $100 in Ethereum, and then it goes down by 90%. Now you have $10. So in order to get back to $100, your $10 has to 10x. So if you lose 90%, you need a 10x to get even. And you're like, well, that'll never happen. All right. Okie dokie. So maybe it does, maybe it doesn't. You know, the initial pushback down to the 382 macro from the bottom to the top, 20%. Oh, sorry, it's the wrong way. 60% to the 0.5, talking about 77% from where we're at right now. And then down to the 618 and my target, which was basically just giving back that move, that single monthly candle. 86%. So, you know, does Binance Coin have to go down 86%? No, but is it possible? Sure looks like it to me. And you're like, no way. That would mean all these people would have to sell. You're just mean to Binance Coin because they won't let you use it in the US. You just hate CZ because he's Asian. Whatever, man. I mean, you can say whatever you want. You can make as many blatant accusations as you want, but you know, I have Asian family members, so it doesn't seem very likely I would hate Asian people. But, you know, you're entitled to that. Hypothetical person that doesn't exist. All right, so gold, how's that gold looking? Is it looking exactly like what we said? Well, the 821 confirmed to the downside. Last time that happened, we dropped about 40% and went sideways for, you know, a decade. So I'd be careful of that. Backtest rejection off the 200 or off the blue slope line. Backtest rejection off the blue slope line. You know, Stokes angled back towards the downside. Doesn't look good to me now. You know, where's it likely to go? Probably like 1300. And you're like, gold will never go to 1300. You're just mean. Why do you hate everything? Why do you hate reality? I mean, 1350? Is that likely our support? That was it. Look, you guys remember, I got bullish as fuck on gold right here at 1350. And we went parabolic after that. So, I'm allowed to get bearish as fuck up here at $2,000 gold and say, hey, we might go revisit that. Does it have to happen? No, but, I mean, it's worth paying attention to. Worth paying attention to. We just lost a 236. That was our clear support right here. So what's the next target to the downside? 382. So is gold going to $1,594? Yep. Uh-huh. Yep. Yep. Mm-hmm. Yep. Uh-huh. Yep. Yep. You know, seems likely to me. And you're like, but the central banks are buying the gold. You just don't understand. God damn it. I hate this channel. I wish I could unsubscribe twice. Fuck. I mean, if you're not subscribed, what are you even doing here? Jesus. Hit that button now. Until someone subscribes, I'm not doing any more technical analysis. All right, I'm just kidding. I'll be waiting forever. We would never have another scream again. So, I don't know. I'm looking at 1476. I'm looking at 1590. And I'm really, really looking at 1350 for the retest of the 200 exponential and simple. And if gold goes to 1350, I'm loading up. I mean, I'm not going to go all in, obviously, because, you know, that's what idiots do. But, I mean, I'm going to load up. I like gold. I'm super bullish on gold. And you're like, it doesn't seem like it. Single tear streaming down your eye. I don't trade the charts I want. I trade the charts we got. So, monthly silver chart, puking right now. Below the 200 exponential. The 200 exponential is red on the monthly. It's puking. $17. Remember when it was 30 and I said it was going back to 20? Remember when it was 25 and I said it was going to be a teenager soon? I said it like 20 streams in a row. Don't talk to me when silver's in its teens. Well, here we are at 17. And you know what? I got other targets and you're not going to like them either. I mean, last thing we want to do is silver down here at like $12.75. Now, do I think it's going there? Probably not. But, I mean, I wouldn't say it's impossible. And you're like, that's just paper traded silver. That's not real silver. I'd never sell my silver for $12. Okie dokie. We'll see what happens. I mean, if we lose this level, if we go any lower, silver's going to look real, real shitty. And it already doesn't look good. Gold silver ratio. Talked about this. I mean, did this literally tell us exactly what was going to happen in advance? It did. Yes, it did. Yes, it did. 821 cross to the upside. Parabolic candle right here. Now we have taken out that previous resistance, closed a monthly above it. You know, the monthly started a couple hours ago and it's already looking thick and juicy. So now at this point in time, we have this little itty bitty candle right here. We have this little candle right here at the top. And then we have two candles. And this candle right here was the Rona dump candle when everyone thought the world was going to end. And there was a plague that was going to wipe everyone off the face of the earth. And, you know, the world would never reopen as we change it, as we know it. That one. And then this was when we found out, okay, maybe it's not that bad. Or the Fed's going to bail us out. Central bank's going to print money. And then this one was like the in-between. And this one was the in-between. So we have a really, really bullish candle, a really, really bearish candle, and two little in-betweeners. Okay? So 4 months worth of price action above where we're at right now. So if we start moving up right here, maybe it takes 1 month to get halfway up and then another month to get the other halfway up. And then maybe we back test it on the next one. I mean, it looks like gold is about to literally fucking go parabolic compared to silver. And gold and silver both look like they're going to go down. So what does this tell me? It tells me silver is probably about ready to fall off a cliff compared to gold. And you're like, you're a dick. I hate you. I hate this stream. And I hate this channel. And I hate your stupid fucking voices. And your mean TA. And it's no wonder you only have 9 people watching, dickhead. Make it 8. Well, I mean, after this, I'm not going to leave now. I got to hear you be mean. Okay, just a couple more. And then we're done. What are we about? Hour and a half in? Okay. So GSG, commodity index. Obviously, you know, this thing was moving up pretty nicely. 821 crossing back up, looking okay. And then literally started rolling back over. You know, the area to back test would be like $18. You know, this is just commodities, like proxy essentially. On the monthly, it looks a little tired right here. I'm still very bullish on this going into the future. I really am bullish on like all the metals, commodities, uranium. You guys know all that stuff. But it looks like we're going to cool down here for a bit. So hard sell, left the bullish control zone, couple red histograms. A back test of 1884 seems very likely at this point. If we go from the bottom to the top, we know the 236 comes in at about $20, 1977. We know the 382 comes in at about 1641. And then we know we have that previous high, sort of like right smack in the middle. So that's what I'm looking at. I'm just looking at that level. You know, and again, it doesn't have to get down there. Maybe it stops at the 236. Maybe it gets to the yellow. Maybe it gets to the 382. But I'm looking to add when we come back down. Now on the monthly, excuse me, on the monthly, you know, depending on how we look at this, on shorter time frames, it's a little bit more clear what's going on. You might draw it differently on the weekly than you do on the monthly. But this at least gets the point across. We basically have 2 touches on the bottom, a third touch right here. And now here we are basically at that same level. So if we go down any further from here, we're going to have compromised the ascending trend line, the parabolic support. So it's definitely possible we just shoot up and have another leg to the upside, and this fib was premature because we haven't actually made it to the 236. Now, if we come down and get to the 236, confirm that that's at least a temporary peak, then we're probably going to break the parabolic trend line and then see, you know, an elongated consolidation, and then we'll look for basically, you know, entry somewhere in this range. And I know it's a broad range. It's like 1650 to 1950. So it's almost like a 20% range right there. But we're looking to buy on that if this whole theory of the commodity super cycle is going to be real, which I think it is. I really do think it is. You know, we went through a super cycle of digitization where everybody's like, oh, who gives a fuck about actual stuff? I just want NFTs of stuff. Or like, you know, digital versions of stuff, or paper trading gold. I don't care about real gold. So if we do go into a period where we have sustained levels of inflation or inflation and deflation, and it bounces back and forth, and there's just a lot of uncertainty, people have a tendency to go back towards what they know, you know, like things that have multiple thousands of years history, you know, not stuff that came out last year and has the name cum in it. Or rocket, cum or rocket. Either of those are equally, you know, how do I put this? Frightening. Okay. If I name my project anything with the word come in it, or rocket, or moon, just be cautious. Be a little cautious of anything named come or has the name moon or rocket or anything like that. You know, or if, let's just say it has like, if it says pyramid in it, or scheme or scam, or maybe it says not a pyramid, scheme, or scam, or something like that, just be cautious of those things. Be cautious. But if we take from the all-time high right here in the commodity index from 2008 to the low right here, that's a 50% retrace, okay? So we back tested up here. This is the 382, and that was on the way down, and we can see the confluence on this. I mean, look, I understand sometimes people are like, well, yeah, in hindsight, of course it looks like something that matters. Sure it does. But I mean, there, you can't deny that this is about as textbook as it fucking gets. Because we don't have the top here and the bottom here until 2020. But in hindsight, looking back at what happened in that 20-year period, or 2008 rather, I don't know what I just said, in that 12-year period, we sell off from the top right here. We find support perfectly at the 50%. And then back test resistance at the 618, support, consolidation. I mean, you can't say that this isn't literally working perfectly. And then we break through, go to a new low past the 0.5, and then all the way down to the 382, a little support, and then again to the 236, perfect support, back test the 382. I mean, this is not luck, okay? It's bots, it's algos, it's market makers, it's whales. And then we put in the low. So then we come back up. As soon as we get back above that 236, which is very clear resistance, you know, obviously you can see the purple line is where I drew it in. You know, myself, the 236 is the actual, you know, fib level. So once we break through that, we immediately come up and back test the 382, you know, start to double top, find support, and then we push up here to the 0.5, get above it slightly, and then, you know, you can't really see because I'll go through and modify these charts. I don't spend much time on the monthly, so I don't really fuck with what you can see, so sometimes it's annoying. But here we're just finding support at that same level. So we broke through resistance, and now it's holding as support. So it's not crazy to think we lose that as support and we come down to the 382, and that's when we get our entry at $18, you know, or slightly lower or slightly higher based on the green fibs right here. But also, let's just say this holds or we get back above it, you know, and reclaim it. We basically were holding and then it sold off. Again, sorry about that. This would have been it holding basically. And then we sold back off to the 8. Looks like we're headed down to 21. You know, that's just going to be resistance to the 0.5. So if we hit the 0.5, we back test the 382, we find support, and then the next target is the 618. And then obviously that is our 1.618 of the yellow fib right here, which is a retrace that we're looking at right now for potential bottom that could go lower. So realistically, let's say it goes lower. Oh, there I go, trying to click on shit on the wrong time frame. Let's say it goes lower and goes down to the 382. And then that's where it actually ends up bottoming. And that's our top to bottom fib extension back to the upside. We can look at where's that 1.618, slightly above the macro 618, which we know obviously there's a ton of price action at. So, you know, then we're looking at 31 as the target. And then if we broke through that, then the 786, and then the back test all-time high, and then off to the moon in our come rocket. So, I mean, we'll see what happens, but it looks like short-term back test, find support, and then go higher. You know, and again, if you haven't looked at, well, why not just buy now if it's going higher? Well, look at that Ethereum video we did and, you know, see what the difference is going to be if you bought right here versus if you just bought right now. If you get the ideal entry versus the convenient entry. And it will literally change how you think about things. All right, so uranium stocks. So we talked about uranium quite a bit lately. I did the deep dive, like over an hour-long video on uranium and nuclear stocks. That is a long-term video with crazy price targets to the upside. You know, that's all TA that could literally last for years. But obviously, somebody had asked, can I do weekly updates on uranium? Yeah, I do 3 times a week updates on uranium when I stream. If I don't specifically have one on here, you can request it. But I usually try to do updates prior to big moves happening. So on the monthly here, if you're not in the group, full disclosure, I've just closed a bunch of uranium positions. Some of them were longer term positions that I've been in for a while. Some of them were scalps off of the recent back test. But a lot of them were up. The recent scalps were up like 30 and 40%. And honestly, uranium looked a little tired. It actually had a nice move up, back up to resistance. This is Cameco. It's holding up pretty nice in comparison. But it's back on top of the 200 simple. 200 exponential is still underneath it. The 8 and 21 have crossed the upside. I do still expect further upside potential longer term. But because we're at key resistance, I went ahead and locked in some profits. Not that big of a deal. I'm completely okay buying in higher if I have to. Let's look at the shorter time frame on this just because people had asked about it. But basically what I was looking at is from the peak right here, which was our target from a long time ago, to the trough right here, the internal retracement, we hit the 786. So we hit the 786, looked pretty toppy to me, pretty aggressive knife. We shot up there pretty quickly based on what amounts to fundamentals. Obviously Japan potentially or is turning on its nuclear reactors. A lot of other countries saying now all of a sudden they're not going to turn off nuclear reactors. People are starting to realize, hey, wait a minute, this nuclear stuff and this fossil fuel stuff might actually be in our future. We're not going to be able to just fart in a jar and power our iPhones with that. It's just not viable. And also, as cool as the sun is and as good as it feels on your skin, it's also just probably not going to be enough for the human race in general to continue on the path. And you're like, well, that's good because I love the planet and I don't even like people anyway, so I hope they all die. And then it's just me and a couple other people eating twigs and berries in the woods because that's God's way. Okay, sure, that's fine. Okie dokie. All right. But those of us that live in the real fucking world obviously know that is absolutely ridiculous. And, as much as you can love the earth and Gaia and the energy, and everything, we need actual fucking energy to power, equipment that makes, food, on farms and rocket ships to become a, multi-planetary species. Stuff like that, So realistically, what's happening here? I mean, we did technically put in a series of higher lows. We put in a higher high. There's a couple crazy ass lines on here. When we look at this, we should be bullish on this. Obviously, we're above the 200 exponential and simple. We're very close to these cycle highs right here. But again, I just locked in some gains. If we top out right here, I'll get another entry lower. If we don't and we continue to the upside, if we take out this level at 332.24, I will probably just re-enter back into the momentum. But this has been our target to the upside for a long, long time. And if we switch back out to our monthly, still very, very bullish on uranium. We broke through the 200 simple. We back tested, put in higher lows, potentially getting ready for a higher high. The two things I see right now are either a deeper back test to $15, which is 50% downside, or a push up to test the next resistance, which is $42, which is about 50% upside. So right now it's a coin toss. We just had an aggressive move to the upside, and the future is uncertain. So for me, I'd rather just lock in those big gains and then see what happens. Still very, very bullish on uranium. Very bullish. But just right this second, I'd rather just lock in those gains. URA, so a little bit different of a story. Not nearly as bullish. Here we see a high, a low, a lower high, a lower low. And now to me, it looks like we're getting ready to put in another lower high. Now, again, does not mean that we're not going higher than here. Doesn't mean that I'm bearish on it or anything like that. It just, to me, seems like we're in a downtrend or corrective phase right now. When we look at the long-term chart, you guys know if we fib from the bottom right here to the top right here, and I'm pretty sure I did this in the uranium deep dive, you can see the same sort of structure and everything drawn on a bunch of different charts. But it looks like 5 waves to the upside, and then that's the completion of a 5-wave structure, and then that's the one in blue, and then looking at the 2. So is it possible we already bottomed right here and that's it, and we're going higher, and we're just bouncing the 382 in green and that's it? It definitely is. I'm counting on a little lower high. Doesn't have to happen. Again, if I'm wrong, I will have to buy in at a higher price, and that's okay because I'll be able to do it with much more confidence. And I'm not a hoarder in the sense that I'm not looking to just get as many URA stocks as I can. I'm looking to get money, actual dollars, or digital dollars that represent real dollars, to one day buy things I care about or pay for bills and stuff. I'm not a hoarder of URAs or CCJs or whatever, like Teslas or Tesla stocks, none of that. So I'm looking for a re-entry around $14 right here. Maybe we don't get it, maybe we do. Obviously we'll watch this on shorter time frames. Clearly in a corrective phase for right now. So and then for pot stocks, CCJ, again, same thing. I did take profits on these positions, called it out in the group in real time. Obviously, we didn't get to my target. My target was slightly higher up here at $4.74, back test of that key fib level and our breakdown. But we were able to basically scoop this up in at $2.62. And honestly, after I felt stupid right here, if you look at every other pot stock, they topped out right here, or the ones I was paying attention to at least, they topped out right here, went lower, and then didn't come up higher. And I was literally thinking, man, I should have just locked in more gains that was reckless because it basically went from 50 something percent in profit to like 25% in profit. So then when it bounced back up here again, I sold in real time, like up 50 something percent on this. So still have some open pot stock positions, but you guys know I'm not just going to dollar cost average into the most disgusting downtrend in all of the world and existence as we know it. You know, every time we get these powerful moves back to the upside, I'm just scalping, keeping a little bit of the position open, and then logging in those gains, locking in gains, locking in gains. Because we're not just going to pick the bottom here. Same, we're not going to pick the top on the dollar. We're not going to pick the bottom on pot stocks. We're going to see it slowly happening over time. Now, could this go back up here? And really, instead of locking in a 50% gain, you know, I could have locked in an 80% gain. Sure, definitely could happen. But a lot of the pot stocks already rolled back over and went lower. So, you know, in hindsight, I definitely made the right decision. For me. Might not be that way for everybody. But again, you guys know this is like the most massive, you know, double top we've ever seen. What does this remind us of? It reminds me of BNB coin, one of the cryptos that we looked at on the stream tonight, which you guys obviously already know. Basically just an Eve top followed by an Atom spike top. And then we have our neckline right here. And when we broke down from the neckline, we got the measure move from the top to the bottom. And it takes us down here somewhere around revisiting the lows. So we hit the 786, got a pretty aggressive bounce. That's what we played. Does it get all the way to the 618? We don't know. But likely we come back down at some point in time and retest the 786. Try to put in some kind of double bottom or rounding bottom or consolidation. And then we can say, okay, now we're going to go bullish from here. Or we come back down and take out that 786. We go to 886, likely to new lows. And we're back down here at like a buck. So to me, the threat to the upside or potential to the upside is the 618. Which is 478. After that, it's the 0.5, which is 778. The threat to the downside is at minimum is $2.40, if not down to $1.59. And then after that, likely new lows. So when I look at this situation, I really think, like, do I just want to hodl from right here? Well, 57% is my next target to the downside. And in all reality, realistically, a double bottom is my target, 72%. So I'm risking 72% from where we're at right now if I just want to hold this and we go to my target. And if we go back to the 618, it's 30%. If we go to the 0.5, it's 100%. So if I have roughly 80% downside risk and roughly 108% upside target, that's basically a coin toss. And it's a coin toss in the most disgusting, just full-on meltdown of an asset/asset class in all the world's existence, with the exception of, like, you know, stuff that Michael Saylor buys. Because obviously he's scumbag, moron, garbage, investor, piece of shit, charlatan. So, I mean, do I want to take a coin toss against the trend during a complete meltdown after we just moved to the upside 50%? No, thank you. No, thanks. I'll pass. I'll just lock in those gains and then I'll buy it at $1 again and we'll give it a try again. And last but not least for today, we have First Trust Natural Gas ETF, FCG. Natural gas peaked in 2008, rolled over in 2014. We had a trough in 2016, and then our most recent trough down here in 2020. Since then, we have backtested key resistance. If we take our fib from the top to the bottom, we see we have come back to the 0.5, and we're basically at that level now. So we're at a key level. The next question is, are we going to go higher to the 618, or are we going to come back down and try to find support at the 382? We obviously don't know. It's coin toss between those two. So realistically, I'm looking to be a buyer at about $16. Target for a seller would be $38, and we're at about 26 right now. So what I want to happen here, ideally, in an ideal world, which obviously we don't live in, we don't know what's going to happen. But in an ideal world, we get a pullback to right around that 382, and we reload around that level before we go higher. And we're essentially looking for that move up to the 618 from the 382. Now, we don't, it might not happen like that. That's a 136% move for us. Could just run away right now and go straight to the 618 and then come down. It could just keep running. We don't know. Obviously, we could buy into momentum. If we take out this high right here, I'd rather buy into momentum on the way up than, potentially buy into a double top. Should be able to reload around that 382 at about $16 though. Hard sell coming out of the bullish control zone. Bunch of green histograms, blue slope line above the zero line. still looks strong, still looks good, like medium to long term. But it does look like it's about to have a short little retrace. If we look at the weekly right here, again, we're back on top of the 200 exponential. We're back on top of the 200 simple, and they're confirming bullish, both blue now. Typically, when we flip them over, we come back down and get a retest. Now, this is probably a front run of the retest, and maybe it doesn't go back down and give us our target. You know, maybe it already kind of did give us our target and we missed it. The real question is this going to be a lower high and it rolls over? Or is this going to go to new all-time highs and then we'll just buy into momentum or cycle highs? Me personally, I would rather buy into cycle highs on momentum. This is the same uranium play we basically just showed. We peak right here. We backtest the 786 and then potentially top. If we top, we go lower and we reload at a lower price. If we break through the peak right here, you know, we just buy into momentum at a slightly worse price, but with much more conviction. I like the idea of that. You don't have to trade the same way. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please, your own research, trade responsibly. We have an ascending support channel. You know, we spent a little bit of time outside the channel. You could argue that it should be drawn differently. I like the way this channel looks, especially in real time. Lots of tests of the heart line. Lots of support right here. You could say, well, why don't we just use a different kind of channel or a different channel tool? A channel with four like levels instead of just like basically a top and a bottom and a heart line through the middle. Something more like that. There's lots of ways we could do it. This is just how I do it. So we're finding support at 200 exponential and also the bottom of the channel here. We're putting in a high. We're putting in a high. We're back testing the 786. It looks like we're rolling over hard sell on the daily, coming out of the bullish control zone. Bunch of red histograms. Still very bullish. If it goes sideways here long enough, it breaks out to the downside. If it goes sideways here and gets picked back up at the bottom of the channel and the moving averages, it's going to new cycle highs. So should be pretty easy to see in real time what's happening. The real question is, you know, we basically came out to the top right here and came down and slightly front ran the 236. So if we don't come down here and put in another leg and at least touch the 236, obviously we're going higher. And this was just a false alarm. This wasn't actually a swing high. If we come down and tag the 236, my conviction that we come down to that support line here, the macro, and the 382 goes substantially higher. So in all reality, should we really be looking at more like this as our buy between the 382 macro, or I'm sorry, the 382 cycle and the 382 macro? That's probably what we should be looking at more realistically. And, you know, timing wise, obviously this is not for timing, but, you know, it seems more likely that if this is going to be the top right here, at least on the shorter term, and obviously we don't know until we at least get back down to the 236, we can't even start to like call this a top. But essentially it looks like the initial leg down, the back test up here, and then we get the push to the 236 or slightly lower. And then we can start saying, okay, maybe that's it now, and we're going to go higher, especially if we get down to the 382. If it gets nasty, we could come all the way down to the 0.5. You know, fundamentally, it doesn't seem as likely. The leg right here is much more like similar to the leg right here, so this seems much more realistic. This is possible. This is definitely possible, like double bottom, slightly lower. We'll keep an eye on it. We'll keep an eye on it in real time. You know, there's probably a different way that you could draw this channel too, where you have something more like this. And actually, we already broke down out of the channel. And this was our back test to a lower high. And then we roll over and we actually go to a lower low. That's a very, very common thing to happen. You know, my channels aren't always perfectly drawn every time. There's often more ways than one to draw a channel. Some people like to use like the fib channels. Even if they don't use the fib numbers, they'll use like 0.25, 0.5, 0.75, and then 0 and 1. So you have like 4 little chunks instead of 2. Like here we have basically below the heart line and above the heart line. But if you could split it into 4 and then, you know, potentially have something like this, and you're like, okay, you know, we operate in the top quarter very little bit of the time, the top half, you know, a little bit more of the time, bottom half the majority of the time. There's lots of ways you could do it. You know, it's up to you. Obviously, a lot of this stuff's subjective. The key I go for when I'm drawing a channel or using like any tool is not necessarily like, am I drawing this perfect and it's right because I say it's right, but like, what's the most people going to probably do? So if I draw it one way and it looks good, and then I draw it another way, completely different, and it also looks good, sometimes I'll keep both of them on there because I'm like, look, a lot of people are probably drawing this both ways. So if I can see how it looks both ways, I'm less likely to get a false signal or get tricked or something, you know, just make a mistake. And that's what it's all about. So, so nat gas, FCG, 16, maybe 14, somewhere around there. Looks pretty fucking juicy though. You know, would it be worth starting to add about 1870? Well, we'll see what momentum looks like and everything going into it, but definitely doesn't seem like a bad idea. All right, so that's our monthlies. Got that monthly breakdown. The beauty of this video, including the thumbnail and then also the description, I made it so it's like pretty clear. I'm going to start doing this once a month for our monthly wrap up, where it's like super easy to basically go back and find that video. So like as we're getting into, this is obviously the August wrap up. As we're getting into the September wrap up, it's easy to go back, find the August wrap up and say, okay, this is what we were expecting to happen. 90% of these things played out exactly as expected. 10% didn't. Why were we wrong? Or maybe 50% are right, 50% are wrong. What changed in the macro? You know, how are we so damn wrong about things that we're getting 50-50 out there like the plebs get? You know, we'll have to look at that. But I just want to make sure it's easy to pick out. Some people had said basically like, hey, can you do this, that, and the other? And I can understand how when you look back through 3 videos a week plus like a couple static videos a week, it can be difficult to find an important one. If I'm putting out, you know, 5 videos per week, that's 20 videos per month. So I just want to make sure it's clear and stands out and everything. And I'll try to do that with like the individual stock, crypto, and, you know, sector breakdowns as well. So, you know, I'm learning off what you guys asked for. I want to make it as easy and educational for you all as possible. Obviously, I'm not doing this for myself. Well, I take that back. I do enjoy this. And also, I love the accountability of it. Because again, these streams are not only a learning tool for you guys. Like when I make mistakes and can look back and see like, what the hell was I thinking in real time? What was my psychology like in real time? Why was I so bullish and everybody else was so bearish? Why was I so bearish and everybody else was so bullish? I mean, that's definitely a tool. All right, let's jump in the chat and then we're going to go ahead and wrap it up there. Hopefully everybody had a good stream today. UKX says, check out uranium stocks like CCJ and you, buddy. Thanks. Yep, did it. Jay Hoff says, hey man, something up with your screen. Can't see the right-hand side with the price scale. Oh shit, this whole time? Can't see the right-hand side with the price scale. Oh shit, you know what? Yeah, that's my fault. It was from that static video earlier. Sorry man, I didn't see it until just now. Apologies. Cool Sheet says, what's up, bro? Bring on bloody September. Yeah, I had it like different set up for like what the actual window is. So it doesn't have all the like trim. My bad. Adam WJS says, Crypto Trend Trader, when will you be bullish? When the markets are bullish, man. You know, I have a very, very strict criteria. So if, you know, I'm bullish right now on yields and the dollar. I'm bullish on those. But, you know, the charts are bullish. Adam WJS says, but sir, CZ is Canadian. There you go. See, that's fine. So I don't have to worry about the accusations. K. Ole says, laugh my ass off. You hate CZ. Adam WJS says, CZ hater. Adam WJS, laugh my ass off. K. Ole's crying face. Yeah, I mean, my favorite ever is like CZ is like at a dinner at like a crypto conference, and he's like, it's like Binance is a shitcoin. Like, he said, buy my shitcoin. You're like, oh no. I actually do believe in Binance, like overall, because it serves a purpose as opposed to 99% of cryptos. Adam WJS, if it was up to me, you'd have 1,000 on stream. Hey, thanks, man. Well, most people don't want like actual education. I can understand why entertainment is far, far greater to most people. Parag says, great stream. All right, man. Everybody have a great night. Appreciate everybody showing up today for our monthly wrap up. Obviously going to be a big month coming up here in September. We have a bunch of important things. We have a bunch of our key inflation numbers. We have the Ethereum deal going on. I'm assuming it's going to happen. Obviously, the switch from proof of work to proof of stake, Ethereum 2.0, whatever you want to. Obviously, we have Powell coming up too, and our next Fed funds meeting / rate hike as well. So we'll see how it all goes. Obviously, right now, most important thing, inflation. So the two most important charts TNX and DXY. As long as those are strong, it's going to be very, very difficult for anything else to pick up any sustained momentum. And when we look at the monthly closes across the board, you know, with the exception of literally 5 charts that I can count on one hand, don't look good. So they do not look good. And 3 of those are Tesla, Apple, and Microsoft. And if they do decide to let go, it's going to get real nasty for them and for the markets. So most important thing right now, wealth preservation, you know, because if we, you know, 100x, but we lost everything first, we still have 0. So the most important thing is preservation so that we can then, you know, extrapolate that wealth. So, but we'll keep up with the updates, keep on the static videos. You guys seem to like them. Everything from like single asset to, you know, asset classes. And obviously like changing up some of the thumbnails and titles to be a little easier to find when you're looking back through a massive backlog of videos. So, but we'll wrap it up there. Obviously, like always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is Wednesday, 10 p.m. Eastern Standard Time. And make sure you check us out for our live streams every single Wednesday night and Sunday night from 8 p.m. till 10 or 11 p.m. And then, of course, our Friday morning streams brought to you by the graciousness of the members who have chosen to support the channel and unlock that 3rd stream a week every single Friday from 11 a.m. till about 2 p.m. for our Friday morning market wrap-up. But as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is 8/31, August 2022. I'm Crypto Trend Trader, and I'm getting the fuck out of here. Peace. If you want to join the group, you can hit me up. Otherwise, enjoy all of the free stuff, and make sure to hit that like and subscribe. Crypto Trend Trader, and I'm out.